All right. Are you guys still with us? Wow. Are you guys still with us? We have one more category before we go to break. So I know you guys want to stretch some legs and, do the jiggy dance. So, peer-to-peer lending, alternative funding, and SME lending. The total volume of European P2P marketplaces is estimated to be £454 million as of February 2018. In the UK, the value of P2P lending increased by 51% from 2016 and 2017 through 2017 and 2018. The UK alternative finance sector is predicted to be worth £12.3 billion by 2020, and 52% of SME owners are now aware of finance options beyond traditional banking. So we have 3 more amazing companies who have done a lot of work and homework to be here. So without further ado, let's bring out Jivan Param from Alterest, Will Hunman from Orbitt, and Rohan Trivedi from StrideUp. Good to see you, sir.
Hi, good to see you. Hey, how you doing?
Hello.
Hey.
I'm over here. So you guys all know the rules. 6 minutes to wow the judges and the audience, win them over. And I'm just going to go ahead and get started. Jivan, your time begins now.
Yep. Hi guys, my name is Jeevan. I'm the founder and CEO of Alterest. We are a London-based company which provides data, analytics, and risk management tools to transform the way capital providers and online lenders interact with each other. So today I'd like to focus on 3 big reasons as to why we are building Alterest, which will also explain to you more about our product. So reason number 1, the technology we are building, we think will become the backbone of the financial system. And that's a bold statement to make, but let me explain with some context. The online lending industry started in the wake of the financial crisis. The new lenders came up, leveraging technology, bringing down operational costs, and building better user experience for borrowers, which enabled the new industry to grow rapidly over the past few years. And fast forward to today, online lending still makes a lot of sense. Lenders are using technology even more to provide faster and cheaper credit to borrowers. And we're also seeing incumbents moving to online lending, as recently seen by the launch of the Marcus online lending platform by Goldman Sachs. So you can get a feel of where, in general, lending is moving towards. And if companies like Amazon and eBay can tell us something, it is that consumers and businesses will move online to procure goods, and credit and loans should be no different. So this brings me to the second reason as to why we're building Alterest. We are building Alterest because it gives us the opportunity to participate in one of the most exciting and fast-growing areas in finance. Alternative lending represents the future of lending, which in itself is a market that's worth trillions of dollars, and this is extremely exciting for us. Before I get to the third point, I'd like to explain a bit about what our product actually does and the technology behind it. This is a high-level view of the lending landscape. You have the borrowers, then the lenders, and the capital providers funding those lenders. The interaction between those capital providers at the bottom and the online lenders, it's quite rudimentary at this point, and that's what we're changing. Our technology indexes and analyzes data on loans worth billions of dollars across the online lending spectrum, which at this point is quite disconnected in separate siloed databases, or worse, in spreadsheets. We bring all of this data together and house it within a powerful in-house built cloud-based analytical toolkit. This provides complete transparency to capital providers. Users can run complex calculations, they automate reconciliations and regulatory reporting using our product. And along the way, they also almost eliminate spreadsheet risk. As much of a product we are to capital providers, we're also a product to lenders. We've integrated loan data from over 17 lenders across UK and Europe, and we built technology that enables us to integrate with lenders or onboard lenders within just 2 days. So I'd like to announce today, the first time in public, that we're launching a new product just for lenders specifically. Once a lender is integrated with us, they can access the benchmarking, reporting, and analytical toolkit that's available, or so far has been available to the capital providers. They also get access to the community of capital providers that we bring to the table. So if there's any lender in the audience, any loan originator, to whom this sounds interesting, please go on to that website, to the link there, and express your interest. So what problems are we really solving? The first is we're bringing transparency to an opaque credit market. And if you think back to 2008, transparency is absolutely critical in this market. The second thing is we bring more enhanced monitoring and greater oversight. The credit cycle we are in right now has been fairly benign so far, and we've been in one of the longest economic expansions in history. So that also means that we're probably closer to a recession than before. So this means we should increase the monitoring and oversight we have on these markets. And lastly, by providing a tool that sits between capital providers and lenders, we are increasing and we're providing better interaction between them, which is the crux of any good financial system. So that brings me to the third reason as to why we're building Alterest. We're building Alterest because it gives us the opportunity to tackle and solve really big problems, huge problems like trying to avoid the next financial crisis, preparing the participants in the market for a downturn, and building a better financial system. And I think we have the perfect team to achieve that. My colleagues and I all come from reputable institutions. We have advanced degrees in both technology and finance. We've spent working in the traditional financial space and also in the fintech startup space. So we have an understanding of where things are working and where things are not. We're also backed by some of the biggest names in Europe, which includes Seedcamp, and supported by names like Winton Capital and PwC. I'd also like to say that we're quite happy with our association with the P2P FA, where we are supporting the growth and the continued expansion of peer-to-peer and online lending. So that brings me to the end of my presentation. So I'd like to leave you with two things. One is if there's any bank or asset manager or lender in the audience, please come and speak to us. And lastly, we are hiring. We have some exciting roles in London. So if you think what we're doing is interesting and you have the skill set for that, please check us out online and get in touch with me, or go on the website and drop me a line. Thanks so much.
Thank you, Jivan. By the way, I owe you guys an apology. Earlier I said you're going to have a chance to shake your jiggies out. I don't know what a jiggy is, nor how to shake it out, but the break is coming up. With that said, Will Hunman, are you ready?
Yeah, try to be.
Did you shake your jiggies out?
In the break.
Okay, so your 6 minutes begins now.
Good afternoon, my name's Will. I'm one of the co-founders at Orbitt. We're African-focused fintech, but unusually, we don't do payment solutions and we don't do remittance. So the question is, what do we do? So Orbitt is a deal origination and processing platform purely focused upon Africa. Our sector-agnostic platform allows global and institutional investors to originate deal pipeline and companies on the continent to get matched to the right type of capital for their fundraise. So we're focused on serving the fragmented and currently underserved mid-market. So for us, that's fundraisers from $5 to $50 million US, and that's across the full breadth of different types of capital, from private equity, private debt, all the way to trade finance. But most importantly, we also facilitate the whole investment ecosystem for originating and efficient execution of transactions. So currently, the challenges within the African M&A market, it's high asymmetry of information between investees and investors. So they've struggled to find each other. It's a large continent, global investors looking inwards. You've got 54 different jurisdictions and a large variety in there. So that asymmetry of information results in a high search costs. And even once they've matched to each other or found each other, then the ongoing transaction costs to get a transaction through to close are also exceptionally high for the continent. So what's Orbitt trying to do to solve that? We are reducing that search time by using our matching algorithm to match investee companies to investors. We have over 450 investors on our platform. We match them exactly on their search criteria, their investment mandates that they're currently handling. As I said, we have 450 investors, and these are global. So we have a much wider reach than your typical company founder, company owner that might be looking to raise capital, but even your typical intermediary or investment banker that's working on the continent, that's helping a company raise capital, they have a limited number of people that they normally go to. We have a much wider global reach. And because we've matched the opportunities to the investors based on their current need, also we do the pre-screening of the opportunities, then we have a much higher success rate, A, with engagement, and then B, with likelihood of closing transactions. For those of you not familiar with Africa and the M&A space there, 2016, there was $22.5 billion worth of transactions in private equity alone. In 2017, that number grew by 7.5% to over $24.5 billion last year, and that's just private equity. Private debt and trade finance are both growing a lot quicker than that. So who do we serve? We have, as I said, the private equity houses, the fund managers. We have the private debt houses that are, again, looking to deploy capital for a return. We have company founders, company owners, company management teams that are tasked with raising capital. But the large part of our market and our user base is the intermediaries. These are the typical investment bankers, corporate finance advisors, corporate lawyers, accountants, auditors that are already engaged with their companies or have a touch point within a transaction. And I'll come back to this later, but we have a very interesting two-way relationship with them. They come to us when they're coming to raise capital, but also they can use Orbitt as a business development tool and have opportunities and new clients referred to them as well. So as I said, we're sector agnostic. We focus on transactions between $5 and $50 million. And this is a good illustration. We see Orbitt sitting at the center of this ecosystem to bring together not only deal origination, but then efficient deal execution. There's very often, it's not specific to Africa, but the transactions will get stuck at a certain point. And they'll need a specialist service, whether it's insurance, whether it's FX coverage, whether it's due diligence services to get a stuck transaction. And we sit within the center of that ecosystem. We can refer services to get transactions through to close. Since we launched last year, we've seen exceptional uptake in this growing and maturing market. There's a real demand there. As you can see with our user growth, we've been growing 20% month on month. Since this time last year, we now have over $750 million worth of transactions live on the platform, and that's across a wide variety of industries and geographic sectors. And we're in a completely white space. As I said, there's nobody else doing this on the continent. There's a lot of people doing payments and remittance. Nobody focused on Africa doing deal origination. We've got a management team with 50 years of experience. And I'll leave you with a few of the comments from our existing users. And we look forward to hopefully having you in the ecosystem soon.
Almost in the nick of time. So we're at the home stretch of the first half of this thing. Don't forget, when we come back from the break, we have a couple of more categories to hear from, and then we'll get into the finalists and the winners per category. No pressure, Rohan, but here we go. 6 minutes for your time here, and it begins now.
Hi, thanks. I'm Rohan Trivedi. I'm a co-founder of StrideUp, and we're transforming home ownership. Rising house prices have basically priced out an entire generation from home ownership. Traditional mortgage finance is essentially offers you a binary choice. Either you can afford a very large mortgage, or otherwise you end up stuck renting and really owning nothing of your home. At StrideUp, we believe another way is possible. Just to get a sense of this challenge, it's instructive to just see where the market is currently. House prices are about 7.6 times average incomes. First-time buyer mortgage multiples are about 3.6 times income. So where traditional mortgages were meant to bridge this gap between your savings and house prices, that really doesn't work anymore for a very large percentage of the population, especially if you're young. So if you're in the age cohort between 25 and 35, a decade ago, 25% of your cohort rented. Now that number is up to 47%, driven by primarily the fact that you can't actually buy a home. So what do we do as StrideUp? We extend your purchasing power to bridge this gap between renting and owning in an affordable and sustainable way. How do we do this? We are your lender, so we replace the bank you would normally have gone to get a mortgage. You come to us, with us you buy your home, you own a share of the home that you can afford today, we own the rest. As your income and savings rise, you can buy more of the home. Think of it as you're owning a part of the home that you can afford today, and you're renting the remaining piece back from us. What does this do for home buyers? It's quite transformative, and it makes what was previously unaffordable now attainable. So you can buy a better home. So say your dream flat is a flat in Hackney, and if you wanted to get a mortgage for it, you and your partner need a combined income of £90,000. With StrideUp, you could get the same property with a combined income of £60,000. Or maybe for your dream house, you're looking to save for a higher deposit, and you need another 5 years. With StrideUp, you can accelerate that process, buy that home today, own a share of it, and as you save more, buy more of that property. Moreover, you can do this without taking on unsustainable amounts of debt, with payments that remain affordable. So the obvious question is, do buyers actually want to share equity? The government's shared ownership schemes are a great proxy for this. They're buyers' shared equity. Every year, there are about 85,000 buyers who are approved for shared ownership, and only about 12,000 homes are delivered, primarily because these schemes are mostly applicable to new builds. That in itself is a latent demand annually of £20 billion. So how do we deliver our product? We want to make the experience of financing and buying your home the easiest one possible. You come onto our platform, you see how the product would work for you, you apply. Using our data and technology platform, we provide you an offer in most cases instantaneously, and then we help you through the buying process all the way until completion and when you can move into your home. So where are we today? We launched with our beta last year. That received significant interest from home buyers. We were getting about 100+ applications in a month for people to buy homes. We've now tied up with a bank which provides us capital to be able to fill some of this demand. And also, we've now been authorized by the FCA as a regulated home finance provider. The UK mortgage market is a $218 billion annual origination market with essentially an undifferentiated product that really hasn't evolved or changed in the last 50-odd years. We have a historic opportunity to deliver to our customers a seamless user experience and build products for them that actually meet their financial aspirations and build a fairer financial system. These are actual quotes from some of our existing customers who went through our beta with us. It's an incredibly transformative experience to be able to take people or help people who've always thought that buying a house is making a significant cut on their quality of life, and actually be able to say, actually, no, you can retain your quality of life, you can actually get what you want to aspire to. Last but not the least, the team, Saqib and I started StrideUp together. We started our careers in banking many years ago. We went our separate ways, but then came back together to start StrideUp about a year and a half ago. We have a fantastic team with significant domain experience across all the vectors that we want to attack to solve this problem: technology, customer experience and design, risk and compliance, and financial services. We are backed by a leading European venture capital fund, and we're really excited about this opportunity to to disrupt what is the largest consumer finance market in the UK, which is mortgages. Thank you. And we're hiring. So if you guys are interested and think what we're doing is interesting, please catch us up later. Thank you.
All right, let's go straight to the judges. 3 minutes, one question each, or however long we get there.
All right, Rohan, question for you. So assuming it's a 4-bedroom house, and I can only afford a 3-bedroom house, I go in a deal with you, so that 1 bedroom. So do I have to pay rent for that to you? Or how does that you own your entity would own the one portion of it, right?
Yes, absolutely. Think of it as, maybe the simplest way to think of it as a combination of debt and equity finance. So say you're looking to buy a house worth £400,000, we'll provide £300,000 in debt and £100,000 in what looks and feels very much like equity. So you pay like a mortgage payment back on the $300,000 and a rental payment back on the $100,000 if you want to break it up.
What happens if I want to do an Airbnb on that 1 bedroom or a 2?
It's your home. So
it's our home.
It's your home. This is like very much like a mortgage contract. So whatever you're allowed under a standard mortgage, you can do that.
Cool. Thank you.
Okay, I have a question for Will. So I understand it's greenfield for you, but competition-wise, somebody else might be looking at this. Who do you think is your biggest competition? Anybody from the outside, maybe?
There are very successful deal origination platforms around the globe. Ideally, one of those will wake up to the opportunity in Africa in 5 years' time and buy us, because we'll have the cornered the market already.
All right, good one.
Question for Jivan. Have you had any validation yet with some of the larger alternative lenders? Given that the market's consolidating, you'd want to work with some of the main platforms, not only the long tail.
Yeah, I think the 2 parts to that answer. One is because we started working with the capital providers first, so we work with some of the most innovative banks in Europe. So that is compelling the platforms to push data to us. And they're doing that because the existing way of them sending that data, reporting to their investors, and providing functionalities on stress testing the portfolio, whatever is not working. So in that way, we are working with some of the bigger platforms out there. The second thing is, in this whole process, we've learned that when it comes to even the biggest of platforms, it's as simple as sending an Excel sheet with a few filters on for a particular investor and push it out in the email, which is, if you're thinking about it, if you want to really scale up your investments to hundreds of millions, can you really sustain that process? No, so we're trying to we're seeing that, and we're trying to get the platforms also to join us, and which is why we're actively looking at what else we can do for the lenders themselves. And this is one of the things that I said.
All right, thank you. One more round of applause for the gentleman here. You may exit the stage.